Hey everybody, this is the sixth time I've tried to make this video today, but my mic messed up after I got it all ready to go, so you guys are going to get the condensed version. So today I wanted to show just some food for thought. I'm not an instructor by any means. Um, I think it's a good idea to have the ETH chart pulled up as well as the RTH. Whatever time frame and chart you choose to trade on only one chart. But it's a good idea sometimes to look at the ETH so that you can gain some more context. So here's a 5-minute chart for the day, and as you can see, we had this big open bar down, back up, micro double top, good sell right here, micro bear channel. So it kind of difficult to get the context, at least for me, because I am a new trader. Now if we back out, because I use a 30-minute chart, if we back out and look at the ETH, it helps me at least to gain some context. So what has been going on? We have this strong bull channel, very strong. Since 5:30 a.m. yesterday, there has not been a single bar close below the EMA on the 30-minute chart. So ideally, as a new trader, you really only want to go with the trend. So let me get this going here. So right here, you could have just waited all day until you got down to your key entry point area. Okay, here's the open bar. We had this outside down bear bar, which was that tight bear channel earlier. And if you have a tight channel, most of the time you're going to get another leg down. So that's the first thing I was looking for after this bar happened. I did place an order right here and got filled. I was going to run to the store real quick before my wife had to take one of our kids to a doctor's appointment. But I couldn't get my remote nonsense to work, so I went ahead and just closed it out. I think I lost like 3 or 4 points, but I wasn't too worried about it. I was going to put a limit order just right here on this channel bottom, and my stop would have been down here, but I just decided to wait. So as you can see, we had this bear leg down. Now I'm looking for another leg, and then I'm looking for an H2. So there's a few areas of confluence, because you don't just want to have a wedge and a bull bar, okay? Because you can have a wedge and a bull bar and a bear trend, and you're still going to get a loss, okay? So your context is what feeds your trade, and then you need to have confluence to further give yourself evidence that that trade is a reasonable trade. And the other thing I want to say is, if you're a new trader, you need to take every trade that you consider to be reasonable. Okay, limit yourself to maybe 2 to 3 trades per day. But once you have a reasonable trade, you have to go for it, because you cannot change the outcome of the trade. The only thing that you can change is what you perceive as a reasonable trade, and that comes with knowledge and experience. At least that's what I'm learning. So I am not looking to sell anywhere in here. I'm not experienced enough to sell these highs or anything like that. So this is why I took this trade. This was my main trade today. I bought above this bull bar, and there's a few reasons why. Number one, we have a wedge. That's a wedge on a smaller time frame. Number two, we have our 2 legs. 1 leg, and we have 2 legs. They didn't get a full measured move, but they did get 2 legs. Number 3, it's at the bottom of our bull channel. Number 4, this is a retest of this breakout point. Okay, so once an area is resistance, it now becomes support if the trend is successful. So I don't know how many things that is, like 4. And then the last thing, and the reason why I went ahead and went in this trade compared to waiting for an H2, is this was an inside bull bar closing near its high at a key entry point. Okay, so that's what made me really go for it on this trade. And the other thing that I'm making myself do, other than taking every reasonable trade that I can, is I'm setting my targets and I'm forgetting it, typically 2 to 1. And let me just give people a sense of caution. If you're a swing trader and you're not going for 1.5 to 2, your trader's equation is not going to work out. Okay, so it's very important to keep those targets there and to balance out your trader's equation. If you don't know what that is, I'm not here to teach you that, but Al Brooks does a very good job of teaching that. And the other thing is technically remember what we talked about yesterday, this is a tight bear channel. We had a break and a push to a new low, which is the same thing as a wedge in a sense. So now we have this inside bull bar closing near its high, so I put a buy above this. We had this doji, which is not terrific because when you have an outside to inside bar, and you can either have outside, inside bars, that's a triangle on a smaller time frame. And why is that important? That's important because that is breakout mode according to the market. The market is building pressure and it's looking to break out of those areas. So we had this crappy, just this doji, okay? Now we have a bull bar with great follow through. This bar threw me for a little bit of a loop. I actually went to the gym after I did this. I set my risk reward right here to 2 to 1. Like right there. Yep. And I just went to the gym. This bar, when I was at the gym, I actually took my tablet with me to try to remote into my computer. And the gym's like a metal building, so I did not get good connection. But this was a little worrisome because really we just have a range right here. Okay, you could put your tops at wherever you want, but that's overlapping bars. That's a range. So now we have this breakout of this range, and we have good follow through. Now, just off of those two bars right there, you could have depicted possibly a measure move. Okay, and then really, as many bars that continues out of that resistance area, you can keep adding on to your measure move. Okay, so you may not get a straight up measure move, but you could get 2 legs at this distance. But again, Al Brooks talks about that. So I came back from the gym, I think around 2:30, 2-ish, and I don't have enough experience to stay in a trade that close to the close. So I did move my target to right here, which is not ideal, but I did it anyway. So I got like 11 3/4 points on that, but from my bad trade earlier, I think I came out with a little over 6 points today, which is not bad, but that stupid little mistake, that stuff is like death by 1,000 cuts. If you have just little spontaneous buys or slippage or whatever, that stuff can really add up. So I wish I would have stayed in a little bit longer, but a win is a win. So just to recap, make sure you understand context overall. That can eliminate a lot of issues, a lot of confusion. And again, I use a 30-minute chart, and a lot of people don't do that. That's great because I'm not experienced enough to trade on a smaller time frame. So just a reminder also that tomorrow is a very important Fed day. There's a lot of Fed decisions and conferences and stuff like that. So it's important to pay attention to the news tomorrow, and probably don't trade around that time. So good luck tomorrow, and I hope this is helping someone. Please subscribe to the channel so I know that new people are enjoying the content, or like, subscribe, whatever you're supposed to do on YouTube, and let me know what you think.